Hi everyone, I'm Rosemarie Miller with Forbes Digital Assets, and welcome back to our daily crypto show, bringing you the latest crypto news and market updates. On to our markets, Bitcoin, Ethereum, and the broader crypto market have bounced from recent lows as the industry braces for regulation. Bitcoin's price yesterday came close to $23,000, its highest since mid-June. And Ethereum has been surging as traders bet on its long-awaited upgrade set to launch in September. The crypto market cap is back at $1 trillion. Bitcoin is in the $23,000 range, which is up almost 5% for the day. And Ethereum is around $1,500, which is also up roughly 5% for the day. On to our leaders and laggards. Nexo at 75 cents, up almost 18%. The crypto lender partnered with MasterCard to offer a cryptocurrency-backed card. Ethereum Classic just above $25, up almost 4% for the day as the Ethereum merge nears. Waves just above $6, up almost 13% for the day after seeing an overall downtrend coinciding with the crypto market. Now on to our laggards. We have sushi sitting at $1.47, down almost 4%. Leo, $5.22, down just about 4% on a daily scale. And Luna is less than half a penny, down almost 3% for the day. First up in the news, we have leaked emails from Coinbase showing the crypto exchange is temporarily shutting down its U.S. affiliate marketing program. Insider received the emails that said, "We regret to inform you that Coinbase will be temporarily shutting down its affiliate program in the United States with an effective date of Tuesday, July 19th. This has not been an easy decision, nor was it made lightly, but due to crypto market conditions and the outlook for the remainder of 2022, Coinbase is unable to continue supporting incentivized traffic to its platform." This is the latest blow to the troubled crypto industry, still reeling from Celsius in hot water. The crypto lender owes 500,000 creditors more than $5 billion and has a $1.2 billion hole in its balance sheet. Those who held their crypto in Celsius accounts will likely be the last to get paid back. The lender contended in its court filings that customers transferred ownership of crypto assets to the company, making those clients unsecured creditors. Celsius has approximately 500,000 depositors, with 300,000 holding more than $100 worth of crypto in their accounts. Celsius's plan to recoup its losses depends heavily on the projected future profits of its half-finished mining subsidiary, Celsius Mining. The second hearing in Celsius's bankruptcy proceedings will be held remotely on August 10th. The U.S. Office of Government Ethics says any executive branch employees that owns NFTs worth more than $1,000 held for investment or income production must report them. This move comes after data in March shows spending on crypto lobbying has quadrupled since 2018. Earlier this month, the Ethics Office barred U.S. officials who own cryptocurrencies from working on crypto-related policy and regulation that could influence the market. Crypto broker Genesis has filed a $1.2 billion claim against Three Arrows Capital, while Genesis's parent company, Digital Currency Group, has assumed the entire $1.2 billion claim, according to an 1,100-page court filing uploaded by the bankruptcy trustee, Teneo. Gemini Crypto Exchange makes a second round of layoffs just 7 weeks after cutting approximately 10% of its workforce due to turbulent market conditions. A source close to the company reportedly said that there was a reduction of 7%, or 68 members, in Gemini's company-wide Slack channel. Dubai's Crown Prince announces an ambitious strategy for expanding the region into the virtual metaverse. This plan includes creating 40,000 virtual jobs and adding $4 billion to its economy over the next 5 years. The Crown Prince tweeted, "We launched the Dubai Metaverse strategy today, which aims to foster innovation in new technology." Dubai is home to over 1,000 companies operating in the metaverse and blockchain sector, which contributes $500 million to our national economy. Dubai appears to be positioning itself as a crypto hub as it attracts the regional headquarters of exchanges including OKX, Crypto.com, FTX, and Binance in recent months. Voyager Digital, who recently filed for bankruptcy, experienced a short squeeze last week, and more recently, the Celsius native token experienced the same. Up next, I sat down with Javier Paz, who is the Director of Data and Analytics for Forbes Crypto. So, as you may have noticed, Voyager Digital, Celsius, all of these companies that have filed for bankruptcy are experiencing a short squeeze with their native tokens. And I kind of want to know a little bit about what does that mean beyond the charts? And should we as the crypto community, should we be concerned?
I would qualify it as an alleged short squeeze, not necessarily one. So there is some misconceptions about the use of short squeeze and whether it applies in this case. It is a technical term borrowed from the equities world. Clearly, the rules of the games are different for token investments as well compared to stock investments. So one of them, the SEC regulates, that's the stocks. And whereas tokens don't have that protection, and when there is a shortage, a squeeze, if you will, there is a short supply of something, in this case, supposedly a short supply of tokens that had been borrowed so that they can be used by firms, by individuals wanting to sell sell the shares or tokens in these companies that are going under or potentially going under. And so when the short squeeze happens, supposedly then they're caught in a situation where they need to produce a share and be able to make their investments whole, but they don't have access to those shares. But in this case, it's a fictitious narrative. There is no lack of Celsius tokens anywhere. Most likely what investors are using is just a simple selling their Celsius tokens, or if they're using derivatives, let's say at FTX or some other place that has derivatives of Celsius, then they will use that instrument, and there is no short supply of those kind of contracts. So we just need to dispel some of these narratives out there in the marketplace.
But why does this matter so much?
I believe the reason why this kind of conversation gains significance is because people want to understand ultimately if there is a rationale for why did my investment lose value. Is there somebody who took advantage of my good faith as an investor of Celsius? And it makes sense for them to believe that there are short sellers, who are behind this. And it's kind of fun to think of a short seller getting in trouble. So when there is a sharp movement, like for example, when the bankruptcy information and the assets and the liabilities of Celsius were coming to the market over the last week or so, that information created something called asymmetric information. So as it comes out, the market says, oh, wow, there's this much of a shortfall, there's this much of assets. So that new information gets priced in to the value of the security. And when there is a sharp, 40% up move and followed by an 80% down move, up followed by a 30% up move, those things drive investor nuts, and they have to have some story that basically tells them, oh, this is most likely what happened. And so that's where people fill in the blank and start to come up with narratives that explain what has just happened. But in reality is, the market is responding to new information. And this new information, it can be beneficial or hurtful for investors. And that's why we see sharp changes in price during these times.
And is this comparable to what happened with GameStop? I'm sure you're familiar with that. GameStop.
Yes.
Yeah.
It is. I'm
Mhm.
familiar with it. I wouldn't say necessarily that it's comparable. A little bit, it could be. But here's the thing. GameStop is an SEC regulated investment, whereas Celsius is not. One is publicly listed, but the other one is not publicly listed. It's listed in a crypto exchange, but it's not the same. And that's where there's less protections. It is not a security, even though it may behave like one.
Thank you all so much for joining us on our daily crypto show. And don't forget to follow us on Twitter @Forbes Crypto.